Hi, Steve Nissen here, founder and CEO of CandleCharts.com, with another edition of Spotlight, some quick ideas to improve your trading and investing. And speaking of quick, just a reminder that there's risk of loss no matter what market you trade. And if you want the whole risk disclosure, you can go to the link over here. And what we're going to be looking at today is what I call candles and context. Many of us know the basic candlestick signals, but what we really focus on here at CandleCharts.com is educating you to really know the nuances to use the candles correctly. So with that in mind, by candles in context, I mean looking at the candles in the context of the recent market action or the overall market condition. So here at the arrow, there is a shooting star. Just remind you, a shooting star is a candlestick with a long upper shadow, small real body, green or red at the bottom end of the trading band. And we would normally say that's a potentially bearish signal. But let's look at candles in context. Notice that since this little rounding bottom, the market has made higher closes, higher lows, and higher highs. And in spite of the shooting star, which is a little bit of a warning, this is another market, another session, and this could be a daily, a weekly, an intraday, it doesn't matter, that did that also higher high, higher low, and especially a higher close. So we would say here, yes, there's a shooting star, maybe lighten up a little bit on long positions, but to turn outright negative, not quite yet because it's a new high close. At a minimum, we would want to see a close under the close of the shooting star. And look what happened. It finally happened over here. The close was under here. Now, one of the things also is we could use many candle signals as support or resistance. So here we have a shooting star. Notice how indeed it became resistance. And this would have been a perfect time, this happens to be Bitcoin, to think about lightening up on your long position, maybe waiting for a potential sell-off to think about buying it, or if you're flat, looking for a downturn for a signal to buy. So here we had a bearish engulfing pattern, the red wrapping around the green, confirming resistance, and the coup de grace was a lower close. This was our final turning signal. The market sold off, and we finally got a buy signal, a hammer. It's the opposite of a shooting star, long lower shadow, small real body at the top end of the trading range. I wouldn't say outright buy. It would just be the first sign the market has turned from down to a little at last bearish. By the way, if you did buy on this hammer, you'd set a protective stop under the low of the hammer, just as we would have said if you went short in a market that it's easy to short, like Forex or options, you'd set a protective stop above here. So the market rallied. Now here's another shooting star. Okay, it's okay to have a bit of a little lower shadow. And again, this is a new high close for the move. So when would we turn negative? By a lower close under the shooting star, which did not happen. And now, based on this recent this chart, the market closed above the shooting star, so it got above that resistance area. And now here we have a doji. Speaking of candles in context, normally a doji is a potential warning signal, but I just noticed this, a little gap, a rising window. So this potentially is support based on the close. So although the doji in and of itself could be a warning the bulls are losing steam, we have to look at candles in context. Yes, it's a doji, but the first support area is right below the doji's close. So keep in mind the importance of candles in context. And you can look below to see how you can learn more about how you can get education like this on our membership site, and how it's going to help you whether you trade Bitcoin, which this is, or any other market, or invest in any other market. Thank you for joining us.